What is the opportunity, particularly for Aurora in the United States, in terms of how you can make the most of it, if at all?
Well, thanks for having me. I think Aurora is a global player and one of the largest, medical cannabis companies in the world. As the U.S., regulatory, framework starts to evolve, Aurora's in a really good place. Today, we announced a large-scale medical deal, with Israel. And so the capabilities and compliance, everything from manufacturing to production to labeling to sales and marketing that we've had to do to be successful as the largest medical provider of cannabis in Canada and in key markets around the world really bodes well for the U.S. And while it's hard to predict exactly, what a federal framework looks like, we were very pleased to see that 4 states, including New Jersey, passed comprehensive cannabis legislation. And so there's definitely movement afoot, and companies like Aurora will be well positioned when it happens.
It's interesting. We spoke with one of your peers a few weeks ago, and he said his biggest competition is the black market. Do you agree, and how do you compete with the black market?
Yeah, I think that's right in Canada. But the fact of the matter is the rec market is growing. We've seen month over month considerable sales increases. We're seeing a lot more retail stores opening up across the provinces in Canada. And so while the illicit market, as we so deem it in Canada, is probably our largest competitor, the movement's afoot, and the consumers are finding that in those new categories such as vapor and pre-rolls and ingestibles and concentrates, the legal market or our market, has a lot of advantages over the illicit market. So it's moving in the right direction, and we're bullish on the opportunities for ourselves.
Talk to us about that bullishness, because analysts aren't always kind, and that you got 1 buy, 13 holds, 4 sells. And Stifel, for example, was saying, we do not believe the company has demonstrated an enduring right to win for new market opportunities. How can you tell them, no, we've got the right to win and we're winning?
Well, listen, our business and our industry is in massive transition. If you look at where everyone was a year and a half ago and how we built up this industry and how the money was coming forward, there just was a different approach to it. I come from over 25 years of regulated CPG background, spending most of my career at Altria, but also in the CBD business, the electronic cigarette business. Now that these companies are being run by professional managers with a CPG background, we can take advantage of the core economic dynamics we have. Margins are very strong. The category is growing. We see a global evolution, as you mentioned, in the U.S. And so I don't think there's any reason, over the next 6 to 12 months that you're going to see companies like Aurora not only be working towards EBITDA positive, but also be free cash flow positive.
It's interesting. You conducted a share sale as well, $125 million. How do you use that money?
Well, as we looked at the capital raise, we felt we were opportunistic. Right now, we don't really need that, cash for CapEx. But what we saw as investors and analysts were looking at our industry, they wanted to see not only execution, but also a runway from a cash standpoint. And so we thought it was the right thing to do. We're now focused on the execution that we have, growing market share, particularly amongst our premium brands. We're really blessed to have brands like Whistler on the super premium side, Aurora and San Raf. And so we think the combination of our market execution, our global expansion, as well as the cash on the balance sheet makes us a compelling investment.
There has been a lot of talk about market share, and you have talked a lot about the premium side that many people do like the sound of going in on that and not just the flower industry. Talk to us a bit about M&A as to whether that's a way of gaining and keeping market share, because in the past you've had to have some goodwill impairments on previous deals. Do you see it all about organic or inorganic?
Yeah, I don't think we need in the Canadian market. If you look at our 4 pieces of business, we're number 1 in medical. I don't see M&A being an opportunity or a need for us in the Canadian market or internationally. When we look at the U.S. CBD business with the acquisition of Reliva, the number 1 Nielsen ranked company, don't feel like we have to do anything there. When we look at other parts of the rec international business, nothing there. And for the Canadian business, we have made significant investments. And you talked about goodwill impairment and right-sizing the company, whether it's production, sales and marketing, branding. We feel like we have everything we need. Now, over time, as certain markets open up, we believe we have the balance sheet to be opportunistic. But today, we don't need it. We're also very proud of what we've done with our SG&A, taking over $60 million per quarter down from over $100 million in a quarter down to the most recent quarter in the low 40s. So we feel very good from a cash standpoint and feel like we have everything we need to grow market share, particularly in those premium categories where you see enhanced margins such as pre-rolls, vapor, and edibles.